All right, welcome. We're going to get started with the Board of Selectmen special meeting budget workshop for Monday, February 26th. We're starting at 7:05. Our first point of business is the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, and we're going to go to item 2, public speak. Joanne Ebert, you're it.
All set, just listening. Thank you.
All right. Okay. Eric, we have item 3, budget workshop for fiscal year, proposed budget. Share your screen so we can go over the things that you want to talk about.
Okay. Okay, so I'm sharing with you something here that we've referred to for the last couple of years as kind of a workaround. And I want to explain why it works. We can change it. There is a more correct way to do it. So what we have not been doing the last, well, since before my time, was accounting for the fact that we never collect 100% of the taxes in any given year. So, but at the same time, we have also not been including as revenue the supplemental grand list. And the reason is those two things most years cancel each other out pretty effectively. So the last full year, the year we just finished the audit on, we had $200,000 in uncollected taxes, but we got back $142,000 in the supplemental grand list. So they don't quite balance each other out, but most years, plus or minus 20,000, they tend to balance each other out. So I can show this in the budget correctly, or I can continue what we've been doing, which is less confusing, but also less accurate. So that's my first question for all of you. We said we were going to talk about this later in the budget cycle, and now it's that. So how do we want to see this displayed in the budget?
Are you showing us the information for I'm sorry. Oh my God, I'm looking at the wrong computer. Are you showing us this uncollected taxes for the current year?
Correct.
But what did you collect from the prior years?
So we collected about 140. So the last year I have a full year of data is the one that just we finished the auditing, which was last year, not the current fiscal year. We ended up collecting 145,750 in back taxes, which was slightly below what we estimated, and collecting $47,000 in interest. And then off of the supplemental, if you look at what the supplemental grand list has been running about $4.5 million. So from the supplemental grand list, we generate about $143,000 in additional taxes above the official grand list that's posted before the budget gets started. Does that make sense?
I'm having problems following it, so I got to ask some questions. All right.
Okay.
So in our budget report, we told everybody that we would collect $200,000 more. The way you're currently doing it, the way it's currently been on, we're saying we're going to collect $10 million or $10,200,000. We only collect 10 million.
Right. When we assume that for budget purposes, when we set a mill rate, that is based on we collect 100%
Yeah, 100%
of the taxes owed.
Okay, now we don't include supplemental, which in this case, the supplemental is $142,000.
Correct.
All right. But we collect back taxes. And I guess my question is that $200,000 just the current year?
That is for not the current year we're in right now. That is for the year that just got audited. So the year that ended July 1, 2023.
Okay. All right. So, Eric, if I look at this, are you telling me I collected back taxes from other years of 145,000 plus 47,000 of interest, 192,000? So I have a supplemental number of 142 and other taxes collected of 192. So totals 330.
Correct.
I've collected more money than I have uncollected.
That is true. But in the budget, we also put in a number for how much we think we're going to get in back taxes and how much we think we're going to get in interest.
Okay, what's that number? Because you're giving us half the story. Like, because to me, I'm sitting there looking at this going, okay, if I collected 330 and I'm $130,000 over the number, I'm in a better position. The town is in a better position.
So I'll cut to the chase. The
Yeah.
year that this budget occurred, when you propagate it all through and you look at what the auditor gives us at the final year, we collected about $20,000 less in taxes and back taxes and fees than we assumed. If that makes sense.
That's the only number I care about. So we're $20,000 short.
Correct.
So in essence, for everybody's side, we ate into $20,000 into our fund balance.
Correct, except we were under on expenses too. So we netted out and we got some other state money into that. So overall, we did fine last year. But yes,
Okay.
our revenue overall was up, but our revenue from taxation was about $20,000, out of roughly 10 million, less than we anticipated.
All right. So we could sit there and try to go through and do a more appropriate calculation, and we would have to sit there and use the history of we are short $20,000, and we would make an adjustment to say we're under $20,000 and we tax everybody for that $20,000.
Yes. What I'm saying is year after year, most years, the math works out about right by not accounting for supplemental and not accounting for the fact that we don't collect 100% of the taxes.
Then I'm in favor of not doing it moving forward. I guess everybody else needs to sit there and vote on it. I mean, we're just so I get it, we're talking a $20,000 change.
The last year we had accurate numbers for it. The difference was $20,000.
And the year before that?
I didn't calculate, but it looked like it was about even the year before that. So on average, this approximation works pretty well, but it's a total approximation.
Yeah, and if somebody goes out and does a better job of collecting and does a harder job of collecting the taxes, we'll probably end up in a positive.
Correct.
It's up to the board. I wouldn't go through the aggravation of trying to calculate it because the supplemental number is a total. It's totally based upon who buys cars when and what gets added to the total number. So, yeah. Anybody want it done and take the $20,000? Because what we would do, in the end, to make it as simple as possible, we would take the $20,000 we are short. We would lower our expected revenue by $20,000 and collect $20,000 more in taxes split across all the residents. Anybody?
No, I agree with you, Jeff.
I'm sorry, I have a little, maybe a silly question, but what's the supplemental grand list?
Okay, so you know what the grand list is, right?
Yeah.
Okay, so over that next period of time, over that next year, so the grand list comes out in October. But what if October 31st, somebody goes out and buys $100,000 automobile? They don't go a year without getting taxed. They get a supplemental bill and they're gonna get 11 and a half months worth of bill. So, and there's actually quite a bit of that. That turns out to be about 1%, a little less than, 1%, 1.5% of the total, total in a year. So
Okay,
that's what the
thank you.
supplemental is.
Okay, thank you.
Yep. Okay, well, if you
Anybody else have a problem with doing it the way we've done it in the past?
No,
No.
I'm fine with it, Jeff.
No, keep it the same way.
okay, so we get rid of that and we don't worry about that. That's good. Share screen. And now we go back to where we are. I did find one error that was fairly significant in the calculations. And that error has existed in the calculations now, at least the last 4 budget cycles, because I went back and looked at all the other Excel spreadsheets. And that is how we deal with abatements and exemptions. So abatements or exemptions come in 2 flavors. They are tax abatements to members of the Andover Volunteer Fire Department for their service if they respond to enough calls in a given year. That's number one. And the second thing is a tax abatement given to the Hop River homes, which is largely in exchange for them allowing us to use their softball field, among other things. So we have the way it's been is this number right here, which is the number to be raised by taxes. If you look at the formula assigned for it, it's item number 5, which is total expenditures minus total estimated revenue minus the use of fund balance, and it should be plus the abatements and then minus allocation of existing funds to fund balance. That formula was incorrect. So that does have a net correction of the final estimated mill rate. So the estimated mill rate is what you see right there. Does that make sense to everybody? Okay. So
Wait. I mean, I'm looking at something else on this. So that makes sense because from a simple standpoint, you're doing it a little bit backwards, but you're saying here are the total expenditures. You're minusing out the estimated revenue from the state, which is F6, and then F7, you're minusing out the use of fund balance because you're not going to have to deal with that from a taxation standpoint. You're adding F8, which is in essence an expenditure, and you're coming down to a number that you've got to generate. So the line 11 is the amount generated.
But we're not really going to generate that number in taxes because we're going to generate that number minus the abatements, but we have to build it into the calculation for the mill rate, if that makes sense.
Yes.
Does everybody understand what I'm doing there and why that is so?
Yes. Eric, can you slide your little wheel on the bottom there to make this a little bigger?
Sure.
Thank you. Yep, perfect.
Okay, Eric, can you come down to um, the section below this? Your different calculation. Column G. I don't understand how you get to that number, 193. So you have an increase in the AES budget of 113,000. A decrease in the RAM budget of 320,000.
Correct.
An increase in the town budget of 611,000. Right? And a fund balance of 100,000 that we're going to use. How do you get 193? Oh, maybe I included 193. Let me ask. Let me see what I do. I get 504.
Well, let me do this a different way.
And or if I just go for the big ones and I just go, this is the change. It's 404 minus 404 minus 100,000. I guess I would take that and you're going F33. I don't get that. It should be like 303,000. 304,000 is the change. I want to sit there and get your final spreadsheet so I can look at the formulas and make sure I'm comfortable with where your stuff is going. So you do have that number does come out right, which is total expenditures. It's the main budget. So that's the three items that we add up. And then you are using the $100,000 fund balance. You're getting estimated revenue from ECS. But I don't get the differences. And maybe I'm being slow.
So the difference between those two numbers is the fact that what is the difference between those two numbers? Counting?
I mean, if I just take the top three, the difference between Andover Elementary, the RAM and the town budget, I get 404, 258.
Right, me too. Subtract 100,000 from that, you get 304.
Yeah, exactly. And so I don't understand how the number, maybe this number is wrong.
So that number comes from F11.
So there's more estimated revenue that's coming through this year. That's why there's a difference. Okay.
Oh, you know what? That is the 140, part of that's $140,000 in interest we're getting now compared to last year. That's a chunk of it.
Yeah, so the way that the spreadsheet's working is you got this total estimated revenue up in row 6. And so that has a $190,000 change.
Yes. So we're estimating more revenue this year, not a lot more, but most of that is interest interest revenue. And that's the biggest chunk of that.
You would still think I would be able to get to it. I get that number. All right, I gotta look at it. I mean, it just, I mean, I had said this after the last year's budget meeting that just even looking on the screen, we could sit there and see where some of the numbers didn't match up. So I'll work with you on that. Because I look at it as there's a $304,000 total increase
Spending,
in what we're requesting, what's being requested by the three entities. $113,000 for AES, a minus $320,000 for RAM, and a plus $611,000 for the town.
right, but then we're generating $140,000 more in interest than we were last year. And we're planning on using at least $100,000 of fund balance. So those two things combined, make a difference of about $250,000.
But you used fund balance last year. You didn't use fund balance. Okay.
We did not use fund balance last year.
I mean, because if I just take your two estimated revenue numbers, they get to 175,400. So the total number doesn't come all the way back. I'll get with you on it. I gotta look at the spreadsheet because I get concerned over it. I really look at, I mean, I'm just gonna tell everybody, I only look at the changes in what we're asking for money. Like, so AES is asking for $113,000 more. We're getting money back, or we're reducing our total expenditure to RAM by 320. And the budget that we have currently, if everything comes through correctly, we're asking for $611,000 of additional money for the town.
Which is huge.
Yeah, it's not small.
Right. So let's kind of look at then the summary sheet of what the big cost factors are. Because that's, if you're going to make a change, that is essentially where you're going to make the change.
Let's see it.
So of that, we talked through the exemptions. Right now, we're looking at about a $500,000 increase. And if you look at it on the town's side, there's two major drivers of that. The first is capital spending. That's up around $280,000. And the second is the all-up cost for running a community center, which is about 127, which includes staffing, cleaning, and then everything associated, benefits, everything included with actually running a community center. So those two things combined are about $407,000 out of that $611,000 increase.
Okay, so there's $204,000 of additional spending. How does the board, how can we see that?
What do you mean by $204,000?
That's the difference between the total.
Oh, right.
11 and those two items. So I mean, I would like to sit there and see what we're up 280 on, and so we all see it on the screen, and then what the total, what your 127 equals, and just so we're all on the same page, because I believe we need that individual, and we need to sit there and we need to tell the community that that individual's job is also going to be to raise or to collect fees for different programs to utilize services. So got to get to that. We don't know that number just yet. Hopefully we'll have a better understanding. I would sit there and say that that person, through all of the fees that they could raise, they should raise $30,000 or $40,000. But that's just a shot in the dark. I'm not sure that that position will generate that, but that's what we need to get at. So Scott and his pickleball people need to kick in 10 grand to sit there and offset the town budget, right, Scott? That's what you said you'd do. No, forget it. Okay, so.
I hope you had that taped.
Yeah. So can you
Okay, so
show us these?
when we're talking about this, if you look at the big ones, you talk about what levers you can pull relatively easy to make a change. The first thing is you can tap more than $100,000 in fund balance if you so choose. Now that we have the draft audit statement, we could safely go all the way up to $200,000 and stay over the 10% minimum that the town should keep in its unexpended fund balance. So that's the first lever you could pull if you want it. But that doesn't affect spending. That's just where we get the money from. Other than that, if you look at the permanent funds, the two new ones that we're putting money into are the AES Capital Fund and the Open Space Fund. Between those two is about $150,000. The multi-use building fund is $50,000. And then after that, if you make a decision not to go for a full-time person for the community center, you could probably figure on saving at least $20K in salary. And that automatically implies if they're a part-time position, they have healthcare for one, not healthcare for two, which is what I was estimating in this. So that would net you about $34,000 in savings. And you could also not add the line item for a construction manager. That saves around $15,000. Oop, I don't know where the rest of this went.
So slide up for a second. So we're saying the fund balance, the increase to the fund balance that you have in here is 280,000. Of that, 150,000 of that is in the AES improvement or capital fund. How much is in that fund? I mean,
with the AES Capital Fund,
you have to, in the future, I'm just telling you, you got to use Excel to do these things so that you can see the numbers and how they add up. You put them on Word document and the total numbers aren't adding up. So somewhere in your spreadsheet up on top, do you have the capital funds, all of them?
Sure.
So we can look at them?
Yep, we'll go right back to that.
Yeah. Okay, you went here.
So these are all the transfers that make up the capital funds. What we budgeted the last few years and what we're budgeting this year.
So $50,000 in contingency, we budgeted that the prior year. $50,000 in the multi-use building fund, we budgeted nothing the prior year. So
Correct.
we're up 50. The fire engine tanker fund, the budget ended up going to 125. We're at 137 this year.
Yep.
Public equipment fund, 125, same number. Road improvement fund, 410, same number. Tree removal fund, $50,000, same number. And then bridge and culvert fund is the other big driver, $75,000 in that one.
Correct. But practically, if we're going to actually do the culvert, we can't touch that because that gives us 2 years to generate enough funds to pay for that.
Yeah. So you got open space. Actually, I'm just gonna sit there. So. So you got AS Capital Fund and open space. You got $75,000 in bridge and culverts. So that's 225. And you got $50,000 in the multi-use building fund. That gives you 275. So that's $275,000 in total increases to capital.
Correct. So if you want levers to pull, and I mean, you could trim a little bit off. You could trim a little bit off road improvement fund. You could trim a little bit off the tree fund. You can trim a little bit off the building maintenance fund. I mean, it just depends what, when you do that, you affect the town's ability to do projects. But I get that. People don't want to pay more taxes. So that really is the decision point.
Okay, does anybody have a desire to cut any of those increases or to reduce the items that are held flat?
No, I don't.
No,
I have a question to do with this, though. I know that CIP had approved the refinishing for the gym floor. Is that in this budget, or is that something for a future budget? I didn't know where that was.
Well, my assumption is that we would fund that out of the building maintenance fund.
Nice.
That would be, that would take up roughly $35,000 or a third of the building maintenance fund. If you're
Okay.
gonna do the gym floor.
All right.
So you're saying that would, wait 1 second, Ann, just so we're all clear, it's out of 305,915?
Correct.
Yeah.
Okay. Okay, go ahead, Ann, sorry.
Because I've been thinking that here we got $119,000 back from RAM from the surplus. And that money was earmarked for education. I would think that should go into the AES capital fund, because that way it stays earmarked for education and not going back into just the general fund.
Well, then, Ann, we should ask AES to cut their budget by $113,000 because that's the increase for this year. I mean, so
No.
you're playing, when we sit there and say that those funds should go back into education because they were originally for, RAM, you're planning, I mean, that's not, I don't think we can sit there as a board and look at things like that. Like, hey, let's put that money because we saved money at RAM, let's put it into the building fund. We have to do what is correct for the community at the point in time we're at.
Well, we've got a lot of, they gave you the list. Celeste Willard sent the list of what the needs of the school are. And they need that plumbing work, that's 200,000. They need the elevator upgrade, that is 50 to 60,000. They need the blacktop sidewalk chip sealed, and they need the upper parking lot reclaimed and paved.
Mhm. And just like for everything, we have to sit there and pick and choose what we can do and when we can do them. You're not going to get all of those done in 1 year.
No, but those are things the school really needs. I don't think that the want for having the gym floor refinished should be getting done before the needs of the school.
Okay,
If
that's
you're gonna
not-
take that
that's-
money for the gym floor, instead it should be going to the school needs. They said they need these things. They don't need the gym floor done.
Well, those are things that we can sit there and you're looking at it going, that $100,000 that is in the building maintenance fund, it can be used for anything that the choice is to make. So, I would sit there and not have a problem evaluating what we're doing, but I'd go, Ann, that gym floor, I don't know, I'm on it all the time. I would sit there and tell you that gym floor, the floor in itself in total hasn't been touched in a long time.
No,
It's been resurfaced. I get that. They
Yeah.
resurface once a year, but it has
of
not
course.
done anything. So,
But,
No, they just put new poly on it. It needs to be sanded down. There's high spots in the floor. It's bad. Or needs to be fixed.
Yeah.
It's-
yeah,
it
It's
may
a-
not be great, but they've got 3 bathrooms in that school they can't use
Hmm.
at all. It's not a matter of, well, the gym floor should be sanded down. Yeah, it probably should if you got money for everything. But the thing that really needs to get done is plumbing. Kids can't use the bathroom there because they have to go running to another part of the school because that thing and it's stinky.
Hmm.
Well, and to be honest,
So, you know,
that's not our decision to decide what we spent the money was. That's the Board of Education. So that's not our call.
Well, no, I
Okay, well,
don't.
then ask the Board of
that's correct.
Education if they want
That
the
is
floor
our
done.
call.
That
Yeah.
is not correct, Jeff,
That's
because if it's a $200,000 expense, that is a capital expense. And
Right.
as the building owner, you fall, you're one of the decision makers for that expense.
Understood.
Eric, just as a side question, I'm sorry,
CIP
Jeff.
yet? Has that
Yeah.
come to CIP yet?
No,
Okay.
And I guess that is a good question. Why didn't the Board of Education bring that to CIP? Because I know the floor wasn't brought to CIP. By the Board of Education. It wasn't. That was brought by the Rec Commission because the Rec Commission is in charge of that building. So that's why the Rec Commission did it. But Ann, that's a good question. And we have to get back to Celeste and the Board of Education. Why isn't the representative at CIP bringing these items to CIP and asking CIP to weigh in on them? And this goes to another question that I have. And Eric, I would love for you to sit there and get through this. Ann brings up a good point, like money saved and how money is spent and where it goes. Can you get from and I know this is a question and I'll probably have to ask Celeste for this, but I would love to get a list of the maintenance projects that the school thought were maintenance projects, such as air conditioning, such as other items that have gone through the Board of Education budget that were spent out of their budget. I would love those. I mean, because I know the only project that I remember that the town weighed in on the board of on the AES school was the roof project about 3 or 4 years ago. That's the last one that I know came in front of CIP. But what are the things that have happened over the last 4 or 5 years that we were not brought into and included on? So that we can sit there and go, because Ann, your question is really a good question. It really is. Your question is, what are the priorities and how do we spend the money according to what priorities are laid in front of us?
Mhm.
And so I think as two groups, we need to be very clear as to who is responsible for spending and setting those priorities. And I do think Jeff Murray is 100% correct. It's got to go in front of CIP. Because we as a board aren't going to put it into this budget unless it went to CIP.
Yeah, and that was my point exactly. It was just these things need to come through, do the process, and they need to go through CIP.
Yeah,
Every other capital purchase in town.
correct. And
Yeah,
I would
that's
love
a
to
big
see, a list because we're not made aware of that. We don't have the data. I would love to see all of the transactions that have occurred that the previous boards have made decisions, and the Board of Education specifically has made decisions to do what I would consider improvements, because this goes into this whole lighting issue and the email that we received. Just so everybody understands on the lighting, I do little kid basketball at the school on Saturdays, and there are 3 switches on the wall that used to turn all the lights on, and one of the switches no longer is active and works to turn on any of the banks of lights. And so when I sat there with that, I immediately sat there and said there's some electrical work that had to have been done on the lights, because that doesn't normally happen, that all the lights go on and one of the switches doesn't work. So that is why I brought up, not the fact that I know the lights have changed. I don't know that the lights have changed. I just know that one of the switches on the wall doesn't work anymore. And so my question is really simple. What changed and what occurred? Now, I could be unobservant, and I don't necessarily think that's the case on this situation, but it was just an interesting thing that happened about two practices ago, about 3 weeks ago, right before our other meeting. And that is why I asked the question, did lights get changed? The superintendent wrote a nice email stating that the lights have not been changed since she has been superintendent. But what I'd like to know, Eric, is, and what I had asked her before this whole thing is, when did those lights change? I asked her for a date, and I told her that I would gladly tell the community that this is the date when the lights were changed. Not pointing out to the school or blaming the school or the school board for anything, just simply telling you guys, when I was in the gym, the third switch doesn't light anything else up. I turn it, flick it on, nothing turns on. Flick it off, nothing goes off. So, and I would ask Scott, because Scott, you're in there on Fridays.
Right?
Did you notice that light switch? I mean, because there's 3 light switches on the
There's
right,
3 light switches.
right?
Yeah.
Only 2 of them now and do anything to the banks of lights. So in my mind, how did the third one get pulled and why?
Right. How long have you been walking past those switches?
How long have I been doing it?
Yeah. Like 10 years?
Probably 10 years.
Yeah.
So I just asked the question. That was my point. My point was not to accuse someone of something or, but I do believe that we as a board and the Board of Education, so when they listen to this, we need to work together and we need to get the information out so that we can do the things that are necessary for that asset, because that school is an asset. It has to be taken care of, has to be maintained. But the reality is, it's got to be maintained in accordance with the town's policies. And the town's policies say that all of these improvements need to go to CIP, and CIP needs to approve them. So, Ann, you're going to end up being our representative CIP. You would be approving these things to come to the Board of Selectmen. We may not agree to put every one of these things on the budget, but they need to be on the list. And if they're not on the list, we're just going to keep running into the same cycle and the same problem. So
From my
100% correct. Put it on the list. And
from my understanding was probably before your time on the Board of Selectmen that the school had asked for some of these capital improvements and they kept getting turned down. So they started just budgeting for them in their own budget. And that had not changed over the years. So now if they can get things through the capital improvement in the town budget for maintenance and major things in the school, they'll do that.
But what you just said, Ann, drives me to a different thought. You're telling me they have budgeted for these improvements in their budget. They're not line items. They're not shown to the community.
Well,
shown
no, I
to
think
the Board
it's
of
when they had,
Education.
I'm not sure how they did it, but I know they had to come up with the money themselves.
Okay, so let's work on that and not get into the weeds on it, but
Right.
please,
Okay.
Ann, go back to the Board of Education, and I will communicate with Celeste. They need to go to CIP. And if it goes to CIP and it gets approved, then it will at least be on our list, because right now we're looking at, as we said before, a $400,000 increase in total dollars. That's all I'm after, is total dollars. Yes, have $100,000 of extra revenue because this board's done a good job of putting money into a stiff account, thanking the town administrator and the treasurer. So we're seeing interest for the money that we have in reserve. So, but that's only the town money, because I'll sit there and I'll ask the same question. Well, what's the Board of Education's balance, and should that money be still in the stiff account earning interest? I mean, this is where we go into the whole other side, and my accounting person comes out in my mental side, like, well, we need to be running this as a town, and we need to be maximizing our interest earning potential. And so we need to do some things differently. And those things that I'm saying are different cause everybody else a huge problem, because, Ann, you're 100% right. The previous boards before I became first selectman had a totally different way of dealing with things. And we have never said no to the Board of Education. We've never given them pause to sit there and think that we're looking at things in a different way. Yes, we have disagreements. There's no doubt about it. There's certain things that we might do differently, but we just got to do it right, and we got to fix it sooner than later. So CIP, and please communicate to the Board of Education that that's where it needs to go. They want the bathrooms done. Please get them up on a list. And then we as a Board of Selectmen can determine if there's priorities or not priorities, and then we can pass it to the Board of Finance, and they can determine if our priorities match their priorities and they're agreeing to fund it. Because in the end, we don't agree to fund anything. We don't approve anything. We just submit our what we believe are our priorities. So as a board, the only thing that I look at this and go, we are basically saying we want to fund more of the capital projects. So I think we're doing what the town needs us to do, which is we're putting $275,000 away for programs. I mean, you know, if I sat there and looked at it, $50,000 for open space, that would be the one that I would target. I understand planning and zoning wants to keep it. I'd be okay with it, but that's what I'd be looking at.
So what do we have for a balance in that account right now?
Around $230,000.
And when's the last time we had an expenditure out of it?
Took some open space funds for that parking over on Lake Road.
Yeah.
We also bought that piece of property that the parking lot is on Lake Road.
Yeah.
We also spent, you know, a good deal of money doing the appraisal for the property we were trying to buy on Shoddyville. Those were the last expenses that we spent out of that fund.
And hasn't been funded in how many years?
Well, so to be honest, that is not something that was ever really funded directly via taxation. Most towns do fund open space. We had only funded open space via fee in lieu of funding. So that $250,000 or $270,000 it was when it was a peak. That was about 20 years worth of fee in lieu of open space.
I'm not sure that's accurate, Eric, because I know that they stopped funding it. It has been funded previously.
Okay, well, that's prior to my knowledge, and you may be correct, but as far as I know, the whole time I was on planning and zoning, it never got town funded. So I've only got probably 14 years of institutional knowledge. So
But
maybe
only
Scott, I will tell you that previous board member, Board of Selectmen member before this group and before the first 4 years I was on it, she had been a developer in town, and she used to sit there and say, and very well, that was money that her and her husband funded. So a lot of it came from the developmental money.
I know. But we took it out. I don't know what year it was, but we took it out in the last 2 or 3 years, Jeff. I know that it was in there and it was taken out. We never put it. Hebron funds their open space fund every year, $50,000 or $100,000 every year.
And they have a different model than we do.
Yep.
Yeah, I just want to make one more comment. It's like, you've seen my email about the ceiling fans in the gym. I was in there this weekend, and, you know, there was tournaments all weekend. And when I was in there, that furnace pretty much ran constantly the whole time we were there. You know, then I find out, you know, I did some digging, and that we're burning approximately 38,000 gallons of heating oil in that school per year.
Yep.
And so, you know, this is something that the Board of Selectmen want to work and try to get some energy efficiencies, because if we can save 20% to 30% of heating that gym by putting these fans in, that's a significant savings. And it's a significant reduction in the carbon footprint of, we're just putting oil up a, you know, exhaust pipe of a boiler. Those are things that we need to be smart about and start working together on, because those are small, little capital projects, but they're going to have a big impact and have payback 20 or even 30 years into the future. So those are the things that I really want to work with and try to get the school engaged in. And I hope that the Board of Education sees that and they want to work with us.
To go along with that, Jeff, that's where the lights kind of in my head were at, where are those LED lights or they're not LED lights? And can we get Eversource in there to do an analysis of things that we can do for the school?
Yeah, an energy audit for that
Yeah,
space.
to improve, what could we do to improve? And are there any grants out there for things like
Yeah,
that?
because if we're not doing setbacks on those thermostats and everything for weekends and nights, then, you know, there's a huge energy savings we could get right there. So those are the things that's kind of going through my brain as an engineer. Especially these fans. I was talking to some application engineers today, and they were saying, you know, with that heat going out the ceiling there, all your heat's getting trapped up and it never gets down to the ground level.
Hmm.
And that's why you need these fans to push the heat and mix everything. So,
Yeah,
I mean, there was fans put in originally for that purpose, and we haven't used those things in years. And so guess how much money we've been wasting and just going out the roof. I
yeah.
mean, those are the things we need to get fixed and get some energy efficiencies.
And if they're not LED lights up there, there should be. It's a
Well,
lot of lighting in that
there
gym.
there should be, but I mean, I don't know when they were changed. I don't know I mean,
But those are easy to swap. You can just swap out the lights. You don't need to change the ballast or anything. The lights, they're just a direct replacement.
mhm. Well, those are things that we have to do after our budget is organized. I mean, we all have to work together more. I mean, there's no doubt about it. And so, Paula, when we're done with this budget stuff, I know you've talked about the Board of Education and the Board of Selectmen having another meeting. We should, because these are things that we should be talking about with them, not. I think they think we're talking at them, but that's not really what we're doing. I mean, I think this board just has a good mix and a lot of different ideas as to what is going on, and we just have to get with the Board of Education and say, okay, this is what we can and can't do. I mean, there's some things that we all as a town and as a community, I mean, we're asking for a lot of money this year, and I get it. I mean, and it's not like we're having a lot of new revenue sources other than the interest income that we're generating. So it's going to end up on residents. It's going to end up on property owners, and I don't think any of it is not needed. I think we might have to peel some of this away. So, but I think it's all needed. It's just a question of everybody's going to have to pitch in. So, well, let's talk about these numbers, and sit there and see if we want to reduce any of the items that are on here that we currently have. So on the capital funds, which is $275,000 increase, there's $50,000, and Eric, tell us what's in the $50,000 for the multi-use building. What are you going to use that for? What is your anticipation?
So my anticipation is that two things. If you look at what we have in the existing multi-use building fund, we've accounted for all but about $20,000 that's currently in that fund to do one of three things: either upgrades to the community center, the town's contribution to build the senior transportation garage, and then the town's contribution to fixing the steep grant for the ball field. So that is the majority of everything we have in that budget now. So if we're not anticipating any projects other than what we're doing now, then you don't need to fund it. But sure as heck, we're going to run into other things and potentially cost overruns and things. So it makes sense to be continually putting some money in that fund.
Okay.
That's my take on it.
Okay. So, and what's your fund balance currently for that number?
Around 430,000.
Okay. So it's $430,000, and we're funding an additional $50,000 to allow us to potentially do work on any building in the community.
Correct.
Okay.
I mean, it was basically designed for new construction, major, renovation or new construction projects. That's what that fund was originally, put in, as opposed to the other fund, which is the building maintenance fund.
Okay. So this goes into this board attempting to save money for future things that we need to sit there and plan for. Okay.
Correct.
All right. Does anybody have a problem with that $50,000 and that they need it removed?
No.
Okay. Okay, Eric, let's go on to Bridge and Culvert Fund. That's $175,000. So it's a $75,000 increase. I mean,
Correct.
I don't necessarily know we need to really review that because you're telling us that it's going to cost us how much to do Lake Road?
Yeah, roughly between us and the state, roughly 1.8 million. We're on the hook for about 900,000. So if we add $175,000 to that budget for the next 2 years, that fully pays for the cost of that bridge with what's already in the account.
Right. Anybody have a problem with that fund?
Nope.
You know, and so what we're doing basically is we're asking, we have the state local bridge grant. We are asking for an extension to push that out with the intention of 2026 construction season. So this fund, so we have 2 more years to collect the money.
All right, the AES Capital Fund, we are funding that at $100,000. Obviously, that money can be used for any project that's currently available or currently in need at the school. And
But with the stipulation, it has to go through CIP.
well, correct. I mean, that's accurate, but, I mean, obviously there's more that needs to get done at AES, but in reality, I don't necessarily know we're positioned to fund any more right now. But Eric, if needed, we could sit there and use some of the money that's in the multi-use building fund if necessary.
Theoretically, yeah, you could.
We could.
Yep.
Okay.
And the other thing is that because we didn't do the paving project last year, they were supposed to transfer what ended up being $124,000 to the town, but their surplus wasn't actually 124,000. So what the auditor has said they could theoretically transfer to that fund is $112,000. So that's
after the audit, that money is available.
correct.
Okay.
However, that project was, $130,000+. So there's still an $18,000 deficit in funding just for that project. Now, I kind of assumed we were going to end up sucking that up out of the road improvement fund. But ultimately that's a board's decision where you want to take that money from if that project goes forward, which is still waiting on an agreement between the 2 boards.
Well,
Board
what
of
we end up having to have happen is they have to go to CIP with all of their requirements, and then you would have that 100,000 plus whatever over or amount of money that the Board of Education has available to put into the fund. And then we can sit there and look at the priorities and then determine if we use any of the money out of the road fund.
Right. So you'd have 212.
Well, you have 212. But if that's the case, they're going to come back and say, well, we need 200,000 for the bathrooms and 130 for the parking lot. And then as a board, we're working with Board of Finance to come up with that total amount of money. So that's the reason why we have to put all the priorities in line and say, well, this is what we can fund this year and this is what we can fund next year. Because as a board, we've done a fairly good job of trying to put money away for the projects. I mean, we put money away for every one of the projects that we had there. And the money that's in one of those funds, though, Eric, is also because we had started putting money away for Bunker Hill, and Bunker Hill is getting 100% paid for.
Right.
Correct.
It's in the culvert fund.
Correct. So at some point, in about 4 years or so, we're going to be able to return a significant amount of money back to the unexpended fund balance. But we need that funding as the swing because we're going to be paying, we're on the hook for the bills we will get rebated the money for that bridge. So we have about $450,000 in cash in the Bunker Hill Bridge Fund. But we're gonna have to outlay that and get reimbursed.
Okay,
So, presumably that fund will run and will be rolled right into the Long Hill Bridge Fund when we're done with Bunker Hill, which is good because they're spaced about 2 years apart. And then we'll pay the contractors out of the Long Hill Bridge Fund for that. And then at the completion of the Long Hill Bridge Fund, two things can happen. Either that money can get dumped in the Bridge and Culvert Fund, which would probably be smart because we have some more failing culverts, or it can get run back into the general fund.
all right, so that's something we'll think about as we move forward, because you're gonna have to put it in the culverts. I mean, unless the state does something from a funding perspective, we're in trouble on the culverts. In total, because if we have an event, let's say a Vermont event, we're gonna wipe out a bunch of these culverts that are already in some trouble, and they're gonna cause us a lot of problems all at once. Well, then, if that's the case, does anybody have a problem with that? Let's just keep going. Does anybody have a problem with $100,000 to the EA's capital fund?
Nope.
All right, does anyone have, a problem with the $50,000 for open space funding? Well, I do. I mean, I think that one I would sit there and not fund because, Eric, do we have any potential developments coming online that anyone's even talked about in town?
That we're gonna get money for the open space fund?
Yeah,
No, and in truth, the zoning commission, when they went to cluster development, they changed the way they allocated open space. And they haven't really been requesting fee in lieu of open space. They've been requesting the actual open space to stay above the state threshold. So I suspect that's really not going to get funded through subdivisions going forward. Or if it is, not very much.
If we don't fund it this year, are we gonna get in trouble with something next year? Or is it gonna be an issue? Or if we,
Well, the question is always, is there something that we want to buy? And having a reasonable amount of money in an open space fund lets you pick off properties when they come on the market that you want. And that's usually done starting with either the Conservation Commission or a recommendation from the Planning and Zoning Commission that these are properties that it would be worth the town acquiring. And the town in the past hasn't been too excited about moving other monies into that fund. So either you have enough money in there to buy it or you don't.
if you had your way, Eric, what would you want that fund to be at?
Couple of million.
Oh,
Jeff, let's say you take the 50 out of that from the 280. What are you left with? You still have an increase of,
no, you have an increase. That's not the
I
point.
still have an increase of 230. So what,
Yeah. If everybody's willing to go to the town with these numbers, that's fine. I'm just going over them. I mean, this is the majority of the money. I mean, it's this and it's the person at the community center.
community center.
And I'm okay with the community center, to be really honest. I mean, I want that person in place because I think it's valuable for the community and the town to have someone there and then to sit there and evaluate how we can have them generate some money to offset their total compensation. So it's
I don't
really
think that you're going to get a lot of pushback from the community.
okay. Well, then we got $275,000 here. We have 80 some odd $1,000. And Eric, what was the number at the 127,000?
Yeah, full up cost for the community center around 127,000, I think.
Okay.
Yep,
And that's still set as full-time, correct?
that says that's with a full-time employee. Um, you know,
Now,
and then
now with the community center not being fully operational, is that, you think that that's still a good, the 40-hour the full-time position is still doable?
I think if you're gonna have programming and staff, you know, and you're gonna try to ramp up programs, yeah, you're gonna need that person there. You know, the other option is just to say, okay, I gave you a wish list of everything I thought it was appropriate for that person to be in charge of. You pull back and say, okay, these other things we're gonna continue to do with volunteers instead of assigning a staff person to do that. You know, those are possibilities, but those come with costs also.
Right.
Yeah, I just think for the transitional period, I don't think it would hurt to have that be a part-time position to start. That's just to get it going, because I mean, I don't think it's gonna be a full-time position to start. I think it's gonna morph into a full-time position, but in the beginning, it probably won't.
But then how do you get somebody that's gonna wanna apply? And then you're
That's
cutting
right.
your chances of that person being available.
Sticking around.
Yeah,
I mean, you're always
You
gonna have
might be
people
the-
you're always gonna pay people, probably trustworthy people that are gonna be paid per diem to open and close the building and make sure that things are done after events. Because that person is not gonna be available 24/7. So you're still gonna need other people to go and open the building, close the building, make sure there's no damage. That type of activity, which would be built into the user fees of the building for an event. You want to have a birthday party or something in there, that fee would cover the cost of that person to go and close up. So, but like I just said, I think it would be hard, even a full-time person, to expect them to be there weekends and 24/7 to support the community center without additional people per diem to go and assist.
yeah.
Well, that is not something I'm building into the budget currently. We can build in additional funds for part-time staff and then try to build in a revenue number that we think is realistic if you want to try to do that.
Well, no. Let's go backwards. Jeff Murray is accurate in that he's stating that the fees for the events should cover the extra costs that we're talking about, because you haven't built in any fees for the community center because we don't know them. And so we
Correct.
can't really build in the costs of the additional part-time staff for after hours closing of the buildings because we don't know them. It's not like we're going to be doing this, you know, if the building is open and someone is using it, there's going to be a fee in it to allow us to close it. So I don't think you need to do those two right now. The question that Jeff Murray brings up is it a full-time position or a part-time position? If it's a full-time position, the number is what you have currently at $127,000. And I think you wrote, if we reduce it to a part-time position, we would save $34,000.
Correct, roughly. That's a pretty good.
Rough.
Mhm.
So the question is, does the board
personally
want to keep
can't
it?
I personally can't see a full-time position to begin with, but then you do have the problem, like Paula said, will that person that would be a good person full-time someday, would they be willing to apply when it's only part-time, or are you gonna have to search again for somebody else when you decide to go full-time? You know, and I don't think you're gonna be able to get enough fees out of that to support very much of their salary. It's gonna be on the town mostly. Because that's not a very big building. You can't, get
Yeah, but you're
fees
not just dealing with the
continually.
building, you're dealing with every other recreational program. I mean, that person's job has to include the gym, the field, everything that the town has available that we might be able to utilize or be able somebody's wanting to use, there should be some structure to the usage. There should be some fee to the usage, and that person, in my mind, is responsible for all of those buildings, all of those structures. So
Now, are you gonna start charging fees to use the gym more than you are, or do they do now charge for to use the gym? I don't even know.
correct.
Um,
There's a fee for, well, I would sit there and go, I don't know what pickleball does, Scott, but I know for basketball, um, there's fees for each participant. Now, how much of that ends up getting left over and utilized by the town is probably not what it should be. But, right now we have fees that we charge for the field, and those could be
Mhm.
organized better. But that's what that person would do as far as I'm concerned. That person's responsible for, um,
Right.
there's nothing to sit there and say the new pickleball courts can't have a fee to lock up a time. And, all it is it's not an excessive fee. You're just trying to sit there and make sure the right people are using it, and that you're getting some money to offset the costs of the recreation program. So, and we may not use anything, and it's going to be at the board's discretion.
Yeah, I
But
just don't want to hire a full-time person and just having them sitting in their office most of the time. That's the one concern that I have. And I think this person actually is probably going to report to the Recreation Commission, because I don't see those people going away. I mean, as far as the structure and everything like that, I mean, that person is going to answer to the Rec Commission and work to what, their recommendations and what their directives are.
Right, so what I've
Senior
said
pro-
initially and what I supplied you before was that I anticipate essentially three committees, interacting with whoever's in that position. One being the rec commission, dealing with all the recreational assets, one being a commission of seniors, dealing with all the senior programming, and then a general community.
Right. That's how I understood it.
But I mean, that's open to negotiation. If you do a part-time position, you're probably peeling back some of that responsibility. And you've got to decide what it is you think you want to peel back. Um, and go from there.
well, that position, and we can start with a part-time position, but that position's been needed by this town for years. As long as I've been involved, it's needed that position. And um,
I mean, my take is once the public sees the value in the programs that are coming into that center, going from part-time to full-time is probably not a big of a jump as going from not having a position to automatically a full-time position.
all right,
I think we need to demonstrate the value first in the community center in this position first before we go to a full-time status on this person. That's just my 2 cents.
But remember, this person is de facto a senior center director, a community center director, and a parks and recreation director. So they're wearing 3 hats. I don't think that's a part-time position if you're going to do it with any kind of reasonable, do any kind of reasonable job. That's my take on it.
Effectiveness.
But I mean, maybe the thing is you don't give them the responsibility for anything related to recreation. And maybe you keep that in, volunteers' hands with the rec commission. But certainly enough people have expressed unhappiness with that, which is why I thought appropriate to roll that into this particular position. But ultimately, that's a decision that could be revisited.
Jeff Murray, if we were to do part-time and then go to full-time, are we talking about the first year the person's gonna be part-time, or do you think? How would we fund that if we're
Oh.
doing part-time for 6 months, and then can we do something like that? What were your thoughts on that?
I think it would have to be for the budget season. It'd probably have to be till next June or July. I mean, we still have a lot of volunteers that want to stay involved. And I don't see them just, just putting their hands up and handing over everything to this new person. I think there's going to be a transition period. And then I think once we have somebody in there that's confident or competent doing this job, then I think you'll see more of that responsibility go to this person. So, I mean, that's just my opinion. I mean,
All right, so if we're gonna do that, so Eric, you're saying the savings would be $34,000 if we moved it to a part-time position.
Yeah, that's my guess. Up to 34,000.
so that would be the savings and the health insurance and,
Correct. I mean, you're gonna need to offer health insurance for a single person anyway.
Yep.
It's just a question of, if they're a full-time position, then they have the option of being on a family plan or having a spouse. So I budgeted for the 1+1, basically, in terms of healthcare benefits, whereas if I was budgeting for a part-time position, I would only budget for a single for healthcare. Now, who knows? Maybe we get somebody that was single anyway, and that would save us $10,000 or $11,000. But I mean, since we're nowhere near the hiring point, we have no way of knowing.
so, I mean, I'm not opposed to having it be a full-time position. I mean, for the Delta, it's not really something that we should really squabble over for, an hour. With that said, I'd be okay with just making it full-time. I mean, it's up to the rest of the board.
Okay, so do we leave it as a full-time position, yes or no?
I'm in favor of full-time.
There.
I'm
If
in
you have-
favor also.
Just to say, if we have somebody that comes in and they can't work full-time, and they're qualified and they want to do it on a part-time basis, I mean, I think we should consider it, but
Yeah, I guess when we cross that bridge, we gotta figure that out. I think we just gotta be prepared that there's gonna be a learning curve, but I think it's gonna ramp up and it's gonna need to be full-time. And somebody's gonna have to really attend meetings or whatever and put paperwork through and gather their thoughts. I think there'll be enough to do for full-time.
I would be just more comfortable if we had a job responsibilities and, what was expected of this person. I mean, we really haven't defined that yet. So we're just saying it's a full-time position without defining what this person's role is really.
Well, we started kind of chatting about it tonight, right? Eric sent in his thoughts. Do you want to talk about it tonight? You want to, because we're kind of up against the wall.
Yeah, I think this is budgetary, so let's just leave it in for now.
Yeah,
And we'll see what happens at public meeting.
yeah. I think we can justify it as full-time. I'm in favor of that.
But before now in the public meeting, I'd like to get something written down of what the responsibilities we think this person should be, because we're gonna get asked that at public meeting. And we should be able to answer that to say, oh, we'll do it later. Then they're gonna say, how do you know if it's full-time if you don't know what that person's responsibilities are?
Well, should we add it to next month's meeting? Talk about it?
I think Eric has given us something.
I mean, I did basically give you what I thought were the job description for that person. I can certainly send it to you again, as a group. I have no problem with that.
I think that's a good point to start with, and then at next month's meeting, have a discussion about it and maybe add or take things away or something. We've kind of touched on this a couple of times, but we haven't really sat down and talked about it. That's my suggestion, is talk about it, put it on the agenda for next month and
Well, yeah, between now and then, can we talk to, Kathy Palazzi and Roberta and, the rec commission and have them put together a list of what they think this person's responsibility should be so that we're all on the same page?
I would sit there and say yes, Eric.
Yeah.
Let's sit there and try to do that for the next meeting, and we should talk about it because it's a big component of the budget. We may as well be prepared to answer the questions, as Jeff said.
Not a problem.
So Eric, there's $204,000 of additional expenditures.
Right,
where are they also coming from?
everywhere.
Everywhere. So RAM is 30, or AHM is $31,000 for that. Why is that?
$31,000.
That's a subtotal of 6, which is
They're about $5,000 of that, plus
so
or minus.
so that's senior. So I was looking at the 6 subtotal. That includes a bunch of other things, not just AHM, but other items. So,
Right. So a chunk of that is the treasurer's salary.
yeah,
A chunk of that is if you go down to the registrars, we're asking for, an increase. It's not a big increase, but it's, a few $1,000. They were asking for extra money for election salaries. That is offset by additional revenue that the state has provided for the towns. But they are asking for an increase, which shows up as a budgeted amount. That's line 116. So the
Construction
zoning
manager.
agent salary, yeah, we'll go back to that in a sec. The zoning agent salary last year, partway through the budget season, you asked me to increase those hours to 19 hours. So we could get on top of more enforcement actions. That's a pretty big jump in the budget, even though his salary increases only slightly. It's because even though we're making him work 19 hours right now, we didn't bake it into last year's budget. So that's the difference you're seeing there, is the increase in budget under 128. Permit link fees are up, but that's just directly correlated to how much permit link fees we charge. So even though that's an 18% increase, it's not actually money. It's not money coming from, well, it's money coming from taxpayers, but not through taxation. Library payroll is up. That was the jump to some extent in the children's librarian, plus the contract for Amy Orlomowski, the director of the library. That's why that's a bump. There is, so there's a pretty big decrease in elevator permit for whatever reason. We screwed up the number and didn't catch it. Last year we budgeted 2,400 for the permit. So that made it all the way through, and that was an oops. So we get that back. We did increase building maintenance, but we did that looking at what our actual building maintenance costs have been the last year. And we bumped that up a little bit to correspond to that. Software maintenance is staying about the same. Our costs for alarm monitoring are going up. Cost for T1 Talon dispatch has been staying fairly steady. They changed their formulation, but fortunately for us, we haven't had a ton of calls from Andover. Therefore, our budget for that didn't go up very much. Postage has gone up, so we're spending more. That's the US Postal Service. Can't really do a lot about that. Office supplies, we've held it low in the 3,000 to 3,500, but the reality is we're going through a lot more than that in office supplies for the town building every year. So I set it to what our actual expenditures were for the last year, which is about 5,500. All of this is the fee structure for the community center. That's just based on some very basic assumptions of the custodian line item is not built in here. It's built into the exact actual custodian line item. But I put it in here so you realize that there is, we are accounting for the custodian for it. But that's its own building maintenance account, an account for HVAC maintenance, because you have an awful lot of ductless split AC units and they all require annual cleaning. You will eventually, I'm assuming, use VoIP phones for the building. And you're gonna need to provide internet service to the building in some form. So $14.75 is the cost to put cable in the building. It would be a little bit more if we went fiber. But we'd also have to run the fiber, and that's gonna be expensive and pain in the butt. So from the beginning, we're gonna assume we're gonna go with just a cable connection. Cost of electricity, that's a crapshoot. That's just based on what heating and cooling loads are, and then what expected plug loads are. That could be a couple $1,000s higher or lower. It depends on the final, what we end up for the building. So, that's the big jump there.
It says defibrillator service, Erica. Did you already purchase a defibrillator for the community center?
I did not, but we're going to have to. I'm assuming we're taking that one out of the $150,000. We're kind of allocating from the multi-use building fund to fit out the building. That given how many senior activities we're going to be, the defibrillator will be a requirement.
Well, how
They're only
much do those
$1,500
cost?
They're not super expensive, but you do have to maintain them every year, and you got to redo the batteries, and you got to test them, and blah blah blah. So that's why I built that into there. Insurance is or employee benefits is a pretty significant jump, because health and dental insurance is going up significantly, and we're adding an employee. So Social Security and Med is going to go up. Actually, that's going to go down. That we overestimated in last year's budget. And we had been pretty heavily overestimating unemployment compensation.
Eric, just so I'm trying to follow you on the budget, on your subtotal. So you have subtotal 1 is going up $43,000. That's basically, just so everybody understands, that's all the salaries related to civil preparedness, library. It's the costs related to the town operations, right? The way you look at this, I mean,
to be honest, the way I did it was I just didn't want to come to one final total, because I figured it was too easy for me to make a mistake in which categories I summed. So I summed throughout. I just made subtotals for all the expenses up to that point to make my life easier when I'm coming up with a final total.
So the increase, the first set of increase, your first subtotal is increasing to those operational jobs that you've just talked about, $43,000.
Correct.
And then you come down to your section, which includes the new community center, which is the biggest. So that, and you included employee benefits in it. Subtotal 2 is $134,000. I did the totals on my spreadsheet on the side. So, but the difference between 619 and 753 is 134. $82,000 of that is the community center costs related with the employee at full time.
Correct, but not including the effect of that on benefits.
Correct.
So that doesn't, so here in employee benefits, you're also talking about the difference in Social Security and Med, health and dental, the insurance, MRF, and all the stuff that goes along with having an employee.
Okay, so this section went up $134,000 in total, $82,000 related to the direct costs of the community center, not the soft costs, not the benefits or anything like that, which are a greater portion. And then
Correct.
Increased salaries and everything else related to the rest of the town in this section add up to another $51,000. Okay.
Seems
And-
about right.
right, and if I sit there and I'm just gonna try to visualize it for myself, so it's 80. The insurance represents, well, the insurance is actually, you actually have the insurance going down. So the $50,000 extra is all of the benefit increases. So it's
Correct.
mostly into the health insurance. Okay.
And the unknown, because we don't have it yet, is what our number's gonna be for Murph. The reason why there's a reduction is that last year, the state comptroller's office came up with a whole new formula and agreement, yada, 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 with the unions and everybody else, which reduced the percentage cost that the town put into it from like 18 something percent down to like 15.85%. But that's an actuarial number they calculate every year. So I don't know what it's going to be for next year. All I can do is set it to what it was last year, and hope it stays roughly the same.
Okay.
Which is why you see the reduction in there in the retirement in Murph. Because remember, we're going to be adding one more person to the retirement in Murph, but we're going down from 18.6% down to like 15.5% for that program.
Okay, so in this section, what we are adding is the costs of the community center, and we are not really in control of the other $51,000, which is the increase in health insurance, unless we go out and get out of the consortium and sit there and try to do our own stuff. So that's a $51,000 increase that there's nothing we can do. There's $82,000 that we as a board can either choose to put in or not put in. We've all talked about putting it in. So let's go to the next section, section 3. There's really no increase. That relates to your old town hall, town garage, old firehouse, just the basic expenditures. for
Correct.
those sections. And so that
Yep.
total increase is only $1,875. So really not worth talking about. Right?
Works
So
for me.
go to your next section, which is section 4. There's a $37,000 increase in this section.
Yep.
You are flagging the transfer station. You flagged on the spreadsheet I have the transfer station wages. Is there a reason? You got
So I was just surprised that it only went up 1% when everything else was 4%. But I looked at the number of hours we're working and it seems right. So I'm comfortable with pushing that through the way it is. So you can take that flag off. I did relook at that since I did the sheet.
So you have about $20,000 of increases in the public works section of this. Majority of that is salaries. Okay. Snow removal budget basically stays the same. The transfer station budget remains the same. Recycling costs are up slightly, $1,000, nothing. Ground care is up $1,500. Street lighting down. The custodian is up $13,000, and I'm assuming you're taking that increase is related to the community center as well.
That is correct. That's the majority of the cost. Willie's getting, the same 4% raise as all the other employees, but he's now taking one additional building on.
Okay. So we have a $20,000 increase in public works and a $13,000 increase on the custodial costs. And that's really what's driving the $37,000 for this section. So,
Correct.
okay. And on public works, is there anything that we can do? And the answer is probably no. So 12,000 is related to wages. You You have a little bit of increase in overtime, and then you have vehicle maintenance that's increasing, so a lot of diesel increases, regular small increases, but they total 20 grand.
Yep,
All right, we had talked about this with Jay. So section 5 is resident state trooper, fire department, fire commission, and the fire marshal, $16,000 increase. And that is related to the fire commission asking for an additional 13 or $15,000.
correct.
And have they presented you with their budget, or they presented it to the Board of Finance?
They've presented me with the budget and I have passed that on to you. I could probably pull that up if you want to review it.
Well, I would think that's probably, what are they asking for an increase for?
Off the top of my head, I don't remember because it was a couple months ago. Let me pull that up.
And someone refresh my memory. Have we looked at that as a board? I don't remember looking at the fire commission. Anybody?
I never did it, saw it either.
I think so.
I'm only talking $200.
You're talking last year, the fire commission budget was 152. This year, they're asking for 167,000. I don't know if Eric has it up there, right? Yeah, it's
I'll get it in a sec. No, wrong
it's
one.
it's row 343.
Wrong one.
9% increase.
Yeah. I have the details on that. I just can't find it at this very second. I'll keep looking. If you want to keep moving on, I'll find that. It's not the fire marshal's budget. No. It's not that one.
Sorry. Okay. If we go on to the next section, which is section 6, senior citizens. The $5,000 increase, the senior citizen budget. So
We're always underfunding that.
no doubt. I agree with you, Scott. We are, but that's what's in the budget, an extra 5,000 there. $20,000 additional into senior transportation, which we've underfunded that prior. Small amount there, and then AHM is an extra $5,000. So $5,000 on the senior programs, $20,000 on senior transportation, and $3,000 on AHM, for a total of $31,000 to be spent additional than, an increase over the prior year. All needed. And then the next section is section 7. That only goes up by $2,300. That includes the selectmen budget, which is decreasing by $800. Board of Finance is staying flat. Conservation Commission is staying flat. The Board of Assessment Appeals is going up $400, $425. Flat. Recreation Commission is going up or requested $3,000 and you wrote a note, wiggle room for incoming senior director. What does that mean?
Sorry, where was it? Where are we?
4503 Recreation Commission.
Uh, 4503.
It's section 7.
So I guess part of my thing is that if we are assigning, if we're putting a professional person in charge of the rec commission, we need to give them a little bit of room for actual programming. And money for programming and rentals of equipment or whatever is needed. Because I don't really have a feel for what that recreation commission should be doing or paying for. But I know I've had to fund pickleball out of my own personal pocket, initially to get it up and running because the rec commission refused to cough up any money. So I sort of feel like that's an area that's been underfunded consistently.
I don't disagree with you.
Thank you for buying those nuts, Eric.
Yeah.
No
Publicly.
problem. Use them in good health.
Um, so there's nothing in here other than the Recreation Commission increase that's significant. So it's a recreation increase for $3,700 and then there's decreases. So the total segment only went up $2,300. So I don't really look at that. And then the last section is section 8, which is capital, the capital line items that we talked about, and that's going up $279,000. That's it. So is there any sections that anyone wants to sit there and go and reduce? So we have talked about the $279,000 in the capital items. We talked about the biggest component of our increase outside of that, which is the community center. I don't necessarily know there's a lot more for us to talk about unless we want to go at different sections of this and reduce. Okay, Eric, do you have the fire commission information or you can't find it?
I'll be honest, I can't find the damn thing, but I know they've given it to me, which is a failure of my accounting. Unless I stuck it in the wrong year or something.
All right.
So I apologize for that.
Well, we can get it down the road. I mean, it's not like it's an excessive increase. And if we look at it, we can sit there. So when do we need to pass this to the Board of Finance?
Ideally tonight, but before March 1st.
Okay, so we have 4 days. Anybody want to make any adjustments to this budget as it's presented right now on the spreadsheet that we were provided in our emails and Eric has up on the screen?
Eric, we, not to change the subject, but we get $5,000 revenue for the rental of the bus every year from the school.
Yeah, ballpark. Yep. Yeah, and we're not trying to charge them all that much for it. We're just trying to get out the kind of minimum. We're just trying not to lose money on that, basically.
Right, that's what I'm thinking too.
Yep.
Did I miss that revenue item? What line is it on?
Is that on the revenue line anywhere?
I don't see it.
Pretty sure that's in one of the that's accounted for in one of the miscellaneous revenue line items. I did not break it out into a separate, its own separate line item.
So under miscellaneous revenue, all you have is $5,000. So that's it for
That's
miscellaneous.
probably it. Yeah.
Okay, then we could call it what it is, and we should lay it out exactly what it is, other than saying miscellaneous, so everybody sees it. Okay. Again, I'm just gonna ask, I mean, we can either approve this budget in totality and send it to the town, send it to the Board of Finance and let them have at it and reduce if they choose to. Or we can sit there and make some changes to it. What's everybody's preference?
Let's vote.
Yeah, let's vote on it.
Okay. Um. So Eric, just so I'm clear and so the increase is $600,000, $611,119. Of that, 280,000 is for capital funding.
Correct.
$127,000 is related to the community center programming and staffing required.
Correct.
There's an additional $204,000 of increases from operational functions that have gone up, such as our health insurance and our insurances, and 4% increase in wages.
Correct.
All right, well then, I'll sit there and make a motion that we pass the budget, which totals 12 million. Well, we're not responsible for all of that. Where's our total, Eric? What section am I looking at?
Well, you could look at the mill rate calculations if you want to just know. I mean, really, the only thing you really vote on are total expenditures.
Yeah.
The only other question is how much of fund balance do you want to recommend using?
Okay.
I have 100,000.
So
You could do any number up to 200,000 that you so chose.
okay, so I'll make a motion that we send the town budget to the Board of Finance in a total of $4,351,970. Anybody want to second that so we can get going?
I'll, Eric, bring the screen down a little bit so we can read the town budget to what? Yeah.
Uh,
4,351,970.
Yes.
I'll second that.
Okay, discussion on that number? All those in favor? Aye.
Aye.
Okay, all those opposed, so nobody. I'll make a motion that I'm gonna make a motion that we use $200,000 in fund balance to offset the monies raised by taxation.
Paula?
I'll second.
Okay, further discussion on that one, so let's have a discussion. So Eric had proposed 100,000, the auditor tells us we can do 200,000 and remain at 10% reserve funding for where we're at.
Correct.
Okay,
I'd be much more comfortable at 150, but that's just my opinion. I think we're pushing the limit at 200.
okay. Jeff, if you want to make the motion for 150, I'll take mine off the table.
I'll just amend your motion from 200 to 150.
Okay,
I'll second still.
okay. Further discussion on that? All right, all those in favor of the $150,000 use of fund balance? Aye.
Aye.
Okay. So now, Eric, this the remaining pieces end up at the Board of Finance. And so now we're gonna push the $4,351,000 budget with $150,000 use of fund balance. Okay,
That is correct.
so can you prepare an updated spreadsheet and send it to everyone? Because I would like to review the formulas on this just to make sure that what we're sending is appropriate.
I can certainly do that. I'd prefer not to do it tonight. I'd prefer to look at it fresh in the morning.
No, you have until the first to present it to the board, or to get it to the board. We have till the first to get it to the Board of Finance. We know the numbers. We just want to make sure that what we're sending them adds up. And if it doesn't add up, then we're going to sit there and get together again because. well,
50,000.
Okay, is there anything else anybody wants to talk about at this meeting?
What's the mill rate is it's negligible, right? To change from 0.46 to what it's
The way with,
31 per. So what?
yes, it's basically a change of about 0.3 in the mill rate.
0.03, 0.03.
No. It's 31.29 to 31.58.
Oh, but I'm saying that the increase
Correct.
is point, it's, yeah, it's 0.3. 0.03.
No, 0.3, not 0.03.
Talking about the mill rate, I'm talking about the
21%.
increase.
I mean, considering this year with the inflation numbers and everything, to come in with that kind of increase, I think is more than
Now,
reasonable.
yeah, the only thing, and I've said this to you before, and I've said it to the Board of Finance also, is that we are in a dip in our funding for RAM. And that is not going to last, and that is going to correct. And when that does, in the next 3 to 4 years, we are going to see some pretty big increases in the funding to RAM. I've been trying to get from them exactly when we're going to see those increases, and to get a better feel for it. But, 3 years down the road, we're going to see definitely a bigger bill to RAM than we're seeing now. So we're not going to continue to be able to see decreases.
But that also goes into to us as a board trying to increase our revenue sources. So, I mean, look at what occurred. We got the grant funding for the bridges, and we now got to fund our culverts for something that we would have had to pay for the bridges and fund the culverts in greater amounts. So we just have to do a better job of looking for grant money for other things. I mean, it goes into our roads. If we could get a significant grant, I mean, if we'd gotten the grant that we applied for the roads, we would have been able to offset some of the money that we would have had to put into that. Now, we can't count on it, but that's what we as a group have to request happens, is that we move and we try to get more grant funding to do some of the projects that are necessity for the community. Because listen, I mean, I always believed we've got, I mean, if we listen to Eric and we believe him, which I do, we got an excess of $25 million in overall expenses that are going to come from culverts, bridges, and roads. I mean, if we wanted to do it all right, I mean, and as a little town, we can't just fund the $25 million out of taxation. We'd have to do a lot of different things if we chose to get it all done, which is really hard within a town like ours because there's no additional funding source other than household taxation. So property taxes on our houses, that's it. So,
Right, we do not have a lot of commercial grand list. That is for sure.
so
But although everybody complains about the Dollar General, it's nice to have that extra $40,000 a year or so from them.
Actually, $40,000.
Mhm.
Pretty good.
Well, we need to work on getting more development along the main road there. And
Well-
even some small businesses.
Well, actually, Eric, that's a good thing. Can the next time, can you have the assessor's office or the tax collector give us a list of the top 10 commercial taxpayers so that we can understand exactly how it's calculated? Because I would wonder what's the difference between the Dollar General and its $40,000 and the Extra Mart or the Mobile or whatever it's called now. Like, what's the difference between
Nope.
that facility and the other?
I wonder what they pay them. Because I asked Japonis about the Dollar General, but I never asked them about the gas station. I'd like to
Yeah.
know what they pay.
It's usually building and inventory,
Yeah.
average
Well,
inventory.
it's building an inventory and they're supposed to pay some money on, and we should actually ask the assessor as to how it's calculated out, because there is an additional, component to a business facility like the Extra Mart. I'd like to see what the numbers are, because then we can then go back and ask other questions. Like, are we,
Do you want to see real estate or do you want to see personal property?
both? If we could have one line for real estate and one line for personal property, that would be great.
Well, I got two different spreadsheets. Which do you want to look at?
Well, put them both up. Put one up and then we'll put the other up.
All right.
I think
Do
it's
you have them now?
still Scott Electric Crafts. I think they're still number one.
Where'd all you people go? Sorry, I gotta figure out where get back to the Zoom meeting. Okay, so that is the real estate, the top 10 for the real estate.
Oh, you gotta be kidding me. Perfect. All right.
Okay, so what's the first one? Saman Properties? Is that
Yeah.
Scott Electrocraft?
No, they're 84 Route 6, but they're probably paying more on equipment than they are real estate. They have a lot of high-tech machines and equipment in there.
Perfect.
Where'd that go, Eric?
Eric, I'm gonna ask you to do it for our next meeting. Can you do that again and sit there and put the total taxes paid? Because whenever you put the assessment, no one understands what the total taxes are. So if you can put
Okay.
the total taxes for and I was I was thinking it would be just the commercial properties, but it's really kind of sad to say that some people, personal property tax owners, are in the top 10. Yeah, it's kind of sad.
That is correct. On personal property, the big two are CLMP and the gas transmission plant. Third is Scott Electric Crafts. Those are the biggest things on the grant list.
But what bothered me there is we don't understand what the properties are on the list that you had put up for us. So you have to, you're giving us the taxpayer's name. And so we don't know what that translates to as far as properties go. So if you could translate that to where the properties are, like what is the Shell gas station paying and what is the Extra Mart paying and what is the Dollar General paying, it would help us all understand. But I would like that list and maybe expand that list. Let's get outside of the top 10 and get to the top 20 so we can all look at it as totals and the total amount of taxes paid by each one of those taxpayers. And then the personal property taxes would also help us because that's a secondary source for the commercial properties that we need to look at. All right.
Okay, so do you want the top 10 or the top 20?
The top 20 from
Top
my
20.
end, 20 real estate. and understanding where they're located, so addresses would be helpful, and for reference so that we know what the Extra Mart is. Because that's really what I was after. And then if we could sit there and do the personal property tax totals, it would at least get us to an understanding of who's paying what. And we can also sit there and see if we feel as if we're missing some of the entities.
At least for personal property, there's your top 10. So you can see where they fit in relative to each other.
Well, that's just an assessment. I'd like to know the taxes paid or collected from all of these entities.
Right.
Sure. Yeah, like I said, I can get that. I just,
Yeah.
you haven't asked for that before, so I haven't provided it.
Okay, well, we got to start looking at different things, so that we're all aware of where the money's coming from and who's paying it, and if there's issues, and we see the details. And in a meeting like this, we have 5 smart people. We can all sit there and say, okay, this makes sense. This doesn't make sense.
Fair enough. One good note. I sent everybody on the board the proposed audit and audit findings from the auditor. From the town's perspective, there were no material weaknesses or audit findings that the town can address. All of them were either by the school or for the school refusing to share financial information with the town. Therefore, the town couldn't actually do its job. So from the town's perspective, this is our first, on the town side, clean audit, certainly since I've been here. So that's encouraging. Mike did give us a list of things we need to work on, but nothing, nothing, really significant. So I would really like to thank Cheryl for getting us to a place where, we're in reasonably good shape.
And we as a board have to work with our other boards to make sure that we fix all the rest of those items. So
Right.
sit there and get to it. Is there anything else that anyone wants to do in our meeting tonight? Okay. Then let's move on to our last item. Item 4, adjournment.
There's no public speak on the agenda.
Oh, there is none, but we're going to let Joanne Ebert speak. Thank you, Paula. Joanne?
Hey, thank you. No, I didn't know if there was any public speak. I just appreciate listening to all of you. I know you put a great effort into it. I had put the one thing that I was thinking of in the chat, just that with such an undertaking and with the, community center getting built and how big that's going to be for our community, which is so small, I was in favor of a full-time person just to get things set off the ground in a good way. Hopefully, do some of that work that Jeff's talking about with programs and recruiting and just kind of outreach to some things that we're bringing in for the seniors. And, that was my 2 cents there. So thank you.
Okay, thank you very much.
Thanks, Joanne.
Now we'll move on to item 4, adjournment.
Motion to adjourn.
Second that.
Okay. All those in favor? Aye.
Aye.
Bye.
All right, thank you very much, everybody. And
Aye.
I'm sorry, one last